Good morning, traders. Today is January 8th. We just started the new year, 2023. Happy New Year. Let's get ready to rumble, so to say. I've just gone through and created a whole bunch of videos for you this week, and I am starting with this SPX chart as well as gold. I want to highlight the incredible rally in gold that is taking place right now, and the fact that gold typically rallies in early stage market bottoms, which is confirming that I believe, or confirming what I believe to be a new reflation cycle trade, which will rally over the next 2 years roughly to back to all-time highs or recent highs, and then push higher over the next 2 or 3 years to about 2026, 2027, maybe 2028, and then roll over into an extended downward trend. This means we have a big expansion phase in gold, which will likely rally from these levels up 100%, up into this $400, $420 area, and then rally even higher up into the $800 area on this chart. Now, from where we're at, remember, we are currently at about 168. This would be about a 700% rally phase. Actually, it's marked here at 400%, but the actual blow-off peak could be much, much higher. And what this is basically showing us here, ladies and gentlemen, is that the markets have devalued. They have expended a distribution phase down into this area, and I believe we're starting a new market cycle phase to the upside, which will last about 3 to 5 years before reaching this ultimate peak over here based on my cycle analysis. Now, the TTScanner Hotlist. Let's go back to the beginning over here, which is the MENT Rotational Modeling System, which is currently bullish 25% on the SPY and bearish daily 75% of our allocation, which nets us into a 50% bearish, 50% cash position. We will stay this way until we get a new daily trigger bullish or a new weekly trigger bearish. So right now, nothing has changed. We are effectively hedged, and we are protecting our capital by staying away from risk in stocks, keeping most of our money in cash, and hedging into a metals position here. We alternately, we have a 20% stock position, 80% cash position, which is hedging against risk to the downside. And I believe that we're going to see the NASDAQ start to form a very solid bottom, that healthcare, biotech, innovation might be leaders out of the market. Silver and gold will likely turn bullish over the next 60, 90 days. Silver is already bullish. Gold will turn bullish. The Dow Jones is bullish daily, weekly. The MC, mid-cap, is bullish daily, weekly. And consumer staples are bullish daily, weekly. Crude oil will continue to weaken, believe it or not. The reflation trade that everyone's expecting out of China and the rest of the world is just, in my opinion, not going to be there. You're going to see some opportunities in certain foreign markets to see some reflation, some reversion trade, potentially back to the upside, or a correction, let's say, back to the upside or downside, depending on previous trend. But understand that the global markets are going to take another 2 or 3 years to really stabilize and continue to wash out the excess debt and credit cycle phases that are currently playing out. So I believe crude oil is going to struggle to find real support. I believe the US dollar is going to stay above 102, 103 for at least another 6, 7, 8 months, which is going to put extended pressure on global markets. I believe the Fed's going to keep interest rates above 2 to 2.5% over the next 2 years before eventually settling back possibly into 3.5% in 2027, 28, and 29, maybe a little higher. And then that's going to be our beginning of our potential crisis phase, 2027, 28, 29. So we have about a 4 to 5 year reflation window, which could be very, very powerful. Now, let's take a look at the TTScanner Hotlist. This is the core hotlist. Let me move this down a little bit. The core hotlist right now is mostly bullish, as you can see. This is kind of interesting because about 5 weeks ago, 6 weeks ago, this was all bearish, all red. We had very little bullish activity. You can also see that the new bearish trades, these two up here, as well as these four down here, have not really matured into too much profit. We have not hit any targets. We're making a little bit of money in these that are 2 or 3 weeks old, but we haven't seen them really mature into any real target level activity. These older ones have already hit targets, which tells us these were, again, nearly 7 months old. These have already reached their apex in the downward cycle and are starting to weaken. The longer term bullish positions, this here is XLE, XOP, and UUP, have already hit targets, likely to attempt to continue. We will see the XOP and the XLE. Let me check, 68.30, 121. So we still have a ways to go. The XLE and XOP could contract a bit further before reaching the stop level. We could get an exit trigger, a go flat on these. But remember, these are almost a year old. So these are holding up. These are weekly swing trades. They've already hit our targets. We have our protective stop. We're up 42% in XLE, and we're up 19% in XOP. The dollar position, the UUP position, is 38 weeks old. We are up 4.42%. We've already hit both targets, and we are fairly close. We're $1.30 roughly away from getting stopped out. But again, what we are seeing here is the core list is turning bullish. We are likely going to see a slew of new triggers over the next 60, 90 days with these bullish triggers, and these short triggers could end up getting stopped out or exited fairly quickly. If you are taking these triggers, remember, you should be trading with a very small portion of your capital. Remember, the allocation level here is 20% into stocks. Obviously, that 20% would be broken into 10 or 20 trading slots. So in reality, this should be less than 2%, possibly 1% of your total trading capital into any one of these TTScanner swing trades. And that would mean that these are really, when you look at a 2.7% gain here, you're really looking at a 0.02% gain, or in this case, a 39% gain. This would be essentially a 0.39% gain. So the idea here is that we're not risking a lot. We're still trading, but we're not risking a lot. It's still a 30% gain, but with a small portion of capital. Okay, next we have the inverse list, completely bearish. The inverse list, for the most part, should be bullish in a downtrend. We are now completely bearish, meaning that we're seeing really weakening market downward trending. We're starting to see some bullish triggers here. Actually, these are leftover triggers, but we're starting to see the market shift away from downward trending. This inverse list goes bullish in a downtrend, bearish in an uptrend. So when the SPY is going up, this is all bearish. When the SPY is going down, this should all be bullish or mostly bullish. Next, we have the value list. Now, the value list has been performing quite nicely. Let me drag this down a little further. We have a number of new triggers here. And you can see that the new bearish triggers, these top four right here, have not really hit any targets. They're all under a moderate amount of pressure. This is telling us that these bearish triggers in, let me come over here, in Calavo Growers, Salesforce, Southwest Gas, Walt Disney, Chevron, oops, went a little too far. Walt Disney is the last one. These have not, they've resulted in negative profits and no targets, meaning we're not seeing a lot of follow through over the last 3, 4, 5 weeks. Whereas these newer long triggers have seen follow through and actually hit targets. This is, again, a pretty good indication that the markets are changing direction and starting to move more to a biased upside trend than a downward trend. You can also see in the value list, we've got a lot of bullish triggers. This has changed. Going back over the past 4 or 5 weeks, this was more mixed with quite a bit of bearish triggers. Now we're getting good solid bullish triggers. We're starting to see a change in the thrust patterns as well. We were all red about 5-6 weeks ago with a lot of downward activity. Now we're getting blues and greens showing up, which is showing us upward activity. So pay attention. We could be getting into a new cycle phase, a new reflation cycle phase over the next 2 or 3 weeks. Next, we have the primary TT scanner phase. You can see that we have a good solid bullish trending phase setting up across quite a number of symbols. We have a new short trigger here, an IYW, which is technology. It's up 1%. Remember, I'm warning you to stay fairly cautious of these bearish triggers right now. I believe the downside opportunities are very narrow. You can see here we had a new trigger a week ago, an XLY, consumer discretionary. We're off 2.5%, meaning we've taken a small 2.5% loss. We have not hit any targets. The longer triggers here are actually holding up okay. We've got a short trigger that's 26 weeks old in gold. We're minus 17% on this. We had not hit any targets. We have XOP, which is long, and we have XLE, which is long, which we saw on our other core list. What we're really looking for here, ladies and gentlemen, is to watch these thrusting patterns turn into more of a bluish green color. So away from this red and purple color, more towards a blue and green color. And this is going to likely happen over the next 30, 60 days as we move away from this consolidation phase and start potentially moving into a real expansion phase. Let me come over here and try to spread this out. Auto scale. And this is again weekly. But take a look at this solid rally in gold. Okay, really good basing, bottoming, and accumulation phase here that occurred right after this base bottom right over here. I tried to draw these lines to give you an idea where this basing bottoming occurred. And drag this one over to here. There we go. And so this is where the basing and bottoming occurred in gold. This is where the new accumulation phase set up. You can see this pink line here across these lows and these red lines here. This puts us in an apexing pattern right through here. Okay, so if we take a look at it, we come down off of these lows, we go A, B, C. We're likely going to see a C, D out here sliding sideways into January 15th, 20th, possibly, and then boom, we will start the reflationary cycle trade back to the upside. And that's my opinion right now. Everything that I've been telling you, going all the way back to May, June, July of this year, telling you that this is a wave 4 downward cycle, and that we would be looking for a wave 5 to new all-time highs, is playing out almost perfectly. Back over here, I was warning you in June, July, August to protect your trades and get out of 60-70% of your trades, run trailing stops. This is not going to be a pretty ending. Back over here, as we neared the end of the year, I moved my allocation levels that you should be protecting your trades and moving to 80-85% cash, getting out of your trades back over here. We stayed in a protective mode all the way down here. We increased our gold allocation back over in this area. We stayed very protected through this entire downward cycle. I started warning you back in this area that this was going to be a wave 4 correction and that we were looking for an end potentially here or here, obviously with an A, B, C pattern. Then we got our D, E pattern back over here. Now we're, just like I've been warning, that we have an upside rally phase, a reversion cycle. Do not get married to the doomsayers. Do not follow what all of these Uber shorts are talking about right now. It's very likely that the U.S. market is going to be the strongest reflation cycle market on the planet. We may see some big moves in other foreign markets, but it's very likely that the strength of the U.S. dollar and US dollar equities will reflate over the next 3 to 5 years, possibly dragging some of the rest of the world upward. I do believe that what I call Class B economies that have been excessively overweighted in debt and exposure to risk could see some real stagnation. For example, a number of countries in Africa and Pakistan and Eastern Europe fall into that category. Most of China, Asia fall into that category. Believe it or not, I think Canada may fall into that category with the excessive speculative bubble that's taken place up there. I think it could take another 3 to 5 years to really unwind up in Canada, and it could be an extended, I read a term just this weekend called rich cession, meaning a recession of the rich, indicating that, if you have high debt loads, trying to maintain and operating a business and have been used to what's taking place over the last 5, 6, 7 years with kind of a Fed-driven rally phase, the next 4 or 5 years could be very difficult for some in this environment, simply because the markets are deflating, the inflation levels are deflating, and we're not going to probably find a base until we get past 2029, 2030, 2031, at which time we'll move back into maybe an upward cycle phase over the next call it 2031 through 2039. The next real cycle phase for opportunity probably doesn't exist until after 2045, 2050, but we have to wait and see. Okay, we are going to wrap it up here. We have a lot of opportunity taking place. This rally in gold is indicating that we're seeing a very solid basing and bottoming take place. This was a fear cycle event here. This is a real accumulation phase in gold. We need to see this market attempt to rally back up. So, for example, the SPX needs to rally back up above 4090, let's call it 4100, let's call it. It's got to get above these previous high levels right over here. And then we're going to say confidently that we are seeing an upward reflation cycle take place. And that's where a lot of the TTScanner triggers will kick in for us. All right, folks, get ready. 2023, 24, 25 is going to be really powerful. Here we go.